Want to stop juggling spreadsheets, calendars, and a dozen apps just to run your rentals? Logify makes it easy. It's an all-in-one toolkit for hosts. Build a direct booking website, automate guest messaging, and keep all your channels in sync. Running your rental business your way has never been simpler. And for Good Morning Hospitality listeners, you can get 20% off any yearly plan with code GMH20. Just check the link in the show notes to get started today.
Welcome to Good Morning Hospitality, your one-stop shop for the latest news, noteworthy trends, and thought-provoking discussions across the industry. From hotels and short-term rentals to all things travel and hospitality, you'll find each episode equips you with the information that you need to start your week. Join us on Good Morning Hospitality every Monday, wherever you get your podcasts.
Hi, everyone. Welcome to this Take video. I'm here with Dale Smith, CEO, co-founder of Host and Stay. Dale, Host and Stay, we're here today to discuss the fact that Host and Stay secures £10.5 million investment from Growth Partner. Congratulations, buddy.
No, thanks, Leo. Yeah, thanks for having me. And it's been an interesting and busy last sort of 3 or 4 months for sure.
Well, look, I can see it's busy because we've only managed to catch you in the car, spending all of that money already, no doubt. It's brilliant. I'm not surprised. You guys are a great business. Just tell us a bit more about the deal. Why have you decided to do it, and why now?
Obviously, we've been on a organic growth journey really the last 5 years since we launched the brand late 2018. I think we had 9 properties, grew that organically over 5-year period to the 1,000 mark. It really felt like the right timing for us to start and acquire other property management businesses to help continue that growth. Obviously, organic growth gets more and more difficult the larger you get. Obviously, we've got aspirations to scale what we're doing across the UK. I think, as you know, like our market proposition is a bit different in the fact that we're 80% fully managed. The other operators, certainly the bigger operators in the market, tend to be the opposite way around from a full management point of view. So this funding coming in enables us to go and do more acquisition. It enables us to invest further into our brand, into our service offering, into infrastructure, and ultimately the timing felt right from a family point of view as well. All said and done, it allows us to de-risk a little bit at the same time as helping us fuel the growth of Host and Stay really. So yeah, it's an exciting milestone for us for sure.
Congratulations. Let's talk about the M&A first. A couple of notable deals recently, one in Norfolk and one in Brighton. Have you got more in the pipeline? Is that where you see, is that what we'll be seeing from you over the next couple of months, or are they still to work out?
No, so we've got active pipeline at the moment. So 100% over the next three to 6 months, certainly there'll be other news of other acquisitions completing. So we've got those lined up. Reality is we've been working on acquisitions for the last 12 months, knowing that we were going to be going through this process and securing investment at some point. So that's been active for us. Ben Duncan, who most of you know as well, been leading on that for us and done a great job. So yeah, absolutely, you're going to see more acquisitions coming under the Host and Stay umbrella before the end of the year. Hopefully that'll continue into 2025 as well. But you'll also see more organic growth coming from us as well. So we've got a pretty robust, hopefully, strategy in terms of continuing to grow the portfolio, both organically and through acquisition as well. And we certainly see the acquisitions as stepping stones for organic growth. If you look at what we've done in Liverpool, we acquired Oh So Simple back in May last year at just over 100 properties within that Liverpool portfolio. That's now at over 200. So, we're keen to acquire into the right marketplaces and then effectively compound that growth through organic once we've secured the acquisitions to the platform.
I was going to ask you about that. I think it's really interesting. You talk about planting a flag somewhere in the UK, acquiring a property management company, and then growing it from there. Does that mean you will be continuing to focus property management delivery as a local function?
Yeah, absolutely. So every acquisition we're doing has got an operation already in place in those locations where we can do service delivery from. So, effectively a warehouse where we can deliver housekeeping, linen, maintenance provision out of, and that's key to us. Like, we want a location and then be able to service within 60-minute drive time of that location from a on the ground FM point of view. And that's certainly our point of difference, is where we believe it should be delivered from an actual true property management point of view. And I said the key for us is that 75-80% that's fully managed on the portfolio at the moment. We absolutely want to stay within that metric for management. Our core belief is a management business.
It's an interesting time to be acquiring businesses because it's been quite a turbulent 12 months in the industry. Is that why you put your foot down now? Are you finding that local agents are running out of steam and ready to kind of pack it in?
I think it's interesting from a timing point of view. If we look at the bigger players in the market, they seem to have slowed down on acquisition. So in terms of competition, the market for acquisition is probably less than what it has been and would have been over the previous 5 years, 7 years even. If we look at regulation coming in, there's certainly going to be smaller operators in the market that regulation is, somewhat frightening for them. Reporting capability in terms of what we're seeing in terms of platform reporting and what needs to be done going into 2025 from that point of view is obviously another thing that property management companies need to have the infrastructure to deal with. So I think from a timing perspective, it probably works for us, certainly from an opportunity point of view, but also, again, back to that full management piece, the licensing possibility, the regulation that we're already seeing actually falls nicely in our kind of ballpark, if you like, because we're already doing the full management piece. Our properties have already got in place everything that we've seen you need to have in Scotland to get a license, for example, if we end up following that route. So it feels like we're nicely positioned to tackle whatever is ahead of us ultimately, or what's ahead for the industry.
We've talked about organic and inorganic growth through acquisition, growing your core around these new acquisitions. Is there anything planned around taking over whole buildings, doing the more service department model? I know that's something you've looked at in the past.
Not really. Core management offering is what we're focused on. Delivery through management contracts. We only really have one significant block in the portfolio, which is on a management basis. We average 1.2 owners per property. So, and that's where we want to be. We want it to be diverse from that point of view. Don't get me wrong, a block of apartments with one owner and one to manage is nice to a certain degree, but it also brings, more attrition risk. If we lose a block of 20 apartments, as an example, it's a big hit to the portfolio. So we want to make sure that effectively we're growing through management contracts and where possible, one owner per contract is nice from that kind of portfolio risks. Don't get me wrong, it means that from a client success point of view, it's more management because you've got more owners to manage and more calls to field and emails to deal with, etc. But I think for longevity, it feels like the right move. It'd be interesting to see what happens to the marketplace with the bigger blocks. We've all seen kind of the rise and fall, I suppose, of the likes of Sonder and those bigger block elements, certainly when they're on, commercial leases. The margins are tight and they're difficult to get to stack up. So it'll be interesting to see what happens with those. But for us, it's all about management contracts. That's our focus.
Very, very interesting. On that, do you have plans to take the concept outside of the UK?
We do. So you'll likely see us go overseas before the end of the year. That will be within Europe, but absolutely we'd like to do stuff further afield as well. Again, we don't really feel like anyone's done the full management piece and made that work across different countries, certainly not across continents. And we think there's opportunity there for that. If we look at the UK market, certainly in the rural and coastal markets, it's very seasonal. We're just coming out of peak period now. We're going to go into 4 to 5 months of low season. It would be nice to be able to complement that low season with a high season somewhere else in the world. So again, that's absolutely on our radar and on the roadmap.
So everyone look out for Host and Ski, Host and Stale.
Absolutely. Yeah, there's a few we could ball on for that for sure.
Fantastic. Very, very interesting. Thoughts on how you think the UK market is going to evolve over the short term, so over the next 12 months? We've had a bumpy 12. I think we're on for a better 12. What's your view?
Um, I just think we're seeing. I think we're seeing the market normalize, Leo. To be honest, we're seeing stock coming out of the market that isn't performing. That's going to help, everybody that does stay in the market to drive higher occupancy and higher ADR, which we all know is needed. I think we're going to see and already have seen people exit the market that were in it for a quick win, and we're moving back. My belief is we're moving back to actually what property investment should be all about, which is a medium to long term hold of the asset. Ultimately, if an owner's coming on board with us at the moment, they're not in it for at least 5 years plus, it's going to be very difficult for them to get a return to stack up, because that just isn't the market anymore. We're not in lower interest rates. We're at high property values. So unless you're trading property, you're not going to get an instant win and instant return. But I think we're all pretty confident that over a 5 to 10 year period, property is proven to deliver returns, and hopefully we're moving back into a market where property owners, property investors are moving back to that mindset, where for the last decade it feels like people have jumped into property to try and not quite to become overnight millionaires, but that same philosophy. And I don't think that's done us that much good. In reality, we've seen too much stock come into the market, dilute pricing, dilute occupancy, causes issues from a press and PR point of view. We all know we've been scapegoated as an industry. Interesting piece that had come out between Airbnb and EY this week I saw, in terms of what the actual impact is on house prices, which I think from an industry point of view, we all know was going to be negligible. So I think actually we're moving into a phase that we do need, which is kind of normalization of the market. And same again, we're kind of, as an industry, I suppose, somewhat frightened of what regulation might do. But again, I think we all know it's probably a good thing in that it raises the bar, it raises the entry point, which for the serious operators and the professional property managers should give us more opportunity if we're doing the job right.
Yeah, I think I agree with some of that. It's a chance to raise the bar as long as it's fair and sensible, right? In its how it's implemented. Fantastic. Yeah. Dale, we can only assume you're off to another M&A deal. That's why you're in the car. You've got our minds racing. For any US viewers who are watching this, not listening to it, Dale's in the UK, so he's not driving the car. He's actually in the passenger seat.
That's true.
Just want to make the point, actually. I just think we should probably clarify that. Can you give us the scoop? Where might we see the next M&A deal?
You'll see the next ones. The immediate ones will still be UK for sure. We're pretty much we're following our kind of core coastal and rural methodology at the moment. The Liverpool one was a bit different for us last year, and it being truly urban. We would like to do more urban stuff, certainly, because we feel like it balances the occupancy, flatlines it. But the next ones that you'll see come from us will be coastal and rural for sure, fitting in with that kind of that holiday let piece, if you like. But yeah, you'll hopefully see some more urban stuff from us as well. And fingers crossed, you'll see an overseas one from us by the end of the year too.
Well, look, congratulations. It sounds like a great deal. We're very excited to see how things progress and see what you make of it all. One more thought before we go. I'm desperately trying to get a scoop from you. You're not biting. I love it. I'm also trying to work out from the car window where in the UK you are, but never mind. Why do you think Growth Partner has invested in Host and Stay?
I think we fit. So obviously Growth Partner is primarily focused on consumer sector. So a lot of what they've done so far has been your kind of true B2C consumer stuff. We're a little bit different because we're both sides, right? We've got property owners that really fit into that B2B category, and then we've got guests on the other side that fit into the B2C. So I think we're a little bit of a different dynamic, and it's Growth Partners' first venture into something that's not kind of vanilla B2C. But obviously Sir Richard Harpin leading that fund, the property sector obviously fits nicely with his background and what he's done and grown with HomeServe. And that was obviously the attraction from our point of view, is that B2C knowledge, but that property knowledge and that kind of infrastructure, that network, because ultimately that plugs right into what we want to do from a property management point of view. Our FM piece, our housekeeping and maintenance side of the business is, over 50% of our revenue as a business. So it's key to us. And we really feel like Growth Partner can help us with that and help us deliver that and help us scale that. And ultimately they've been fantastic to deal with through the process. And we've got a pretty good 5-year vision in terms of where we want to get to.
Great. I won't keep you any longer. Dale, thanks so much for joining this Good Morning Hospitality Hot Take. You at home, if you've enjoyed listening, please hit like, share, subscribe in all the usual social places. Until I see you again, Dale, all the best.
Cheers, Leo.
Want to stop juggling spreadsheets, calendars, and a dozen apps just to run your rentals? Logify makes it easy. It's an all-in-one toolkit for hosts. Build a direct booking website, automate guest messaging, and keep all your channels in sync. Running your rental business your way has never been simpler. And for Good Morning Hospitality listeners, you can get 20% off any yearly plan with code GMH20. Just check the link in the show notes to get started today.